The most anticipated stock market debut in years isn't a car company or a social network. It's an AI lab that didn't exist 5 years ago. Anthropic, the maker of the Claude AI assistant, filed to go public, and it could list as soon as this fall at a valuation approaching $1 trillion. That would make it one of the largest tech IPOs in history. But behind the staggering numbers sits a company that loses billions of dollars a year. So before the hype machine spins up, here's what you actually need to know. First, the basics. Anthropic was founded in 2021 by a group of former OpenAI researchers, led by siblings Dario and Daniela Amade. It builds Claude, a large language model that competes directly with OpenAI's ChatGPT, but it's positioned around one core pitch: AI safety. Where rivals chase consumers, Anthropic went after businesses. Roughly 80% of its revenue comes from enterprise customers, including a majority of the largest corporations in America. On June 1, 2026, it confidentially filed its paperwork with the SEC, edging just ahead of OpenAI in the race to Wall Street. The target: a listing on the Nasdaq as early as October. Now the numbers that have everyone's attention, and they are genuinely hard to believe. Anthropic's annualized revenue reportedly went from around $1 billion at the end of 2024 to more than $40 billion by mid-2026. That's not double. It's roughly a 40-fold increase in about 18 months. No enterprise software company on record has grown that fast at that scale. Its private valuation tracked the same rocket trajectory, hitting about $965 billion in a funding round just before the filing. Many bankers now treat a debut above $1 trillion as the base case. On paper, it's one of the most valuable companies on Earth. And that word "on paper" is where the skepticism has to begin. Because here's what the headline valuation hides. Anthropic is not profitable. Reports point to losses in the range of $11 billion a year, driven by an enormous bill. The company has reportedly committed to spend tens of billions of dollars on the computing power needed to train its models. It doesn't expect to generate positive cash flow until 2027 at the earliest. There's also a subtler concern analysts have flagged. Anthropic reportedly books revenue from its cloud partners on a gross basis, counting the full amount customers pay through platforms like Amazon and Google, before paying those partners their cut. That can make the top-line number look larger than the cash the business actually keeps. None of this means the company is failing. It means the trillion-dollar number deserves scrutiny, not applause. There's one more thing every retail investor needs to hear clearly, because it's where people get hurt. Right now, you cannot buy Anthropic stock. It's private. And the company has gone out of its way to warn that any unofficial pre-IPO shares, tokenized products, special purpose vehicles, secondary market offerings it hasn't approved, are not valid and will not be recognized. It specifically names several platforms as unauthorized. So if you see an ad promising early access to Anthropic shares before the IPO, treat it as a serious red flag. The only safe way in, for an ordinary investor, is to wait for the actual public listing through a normal brokerage account. So what should you actually watch for? One document matters more than all the hype: the public S-1. When Anthropic releases its full filing after SEC review, it'll show audited financials, the real revenue breakdown, the true losses, the risks, for the first time. That's the moment the story gets tested against numbers instead of narrative. Watch for the share price range and the listing date, which typically firm up in the weeks before the debut. And remember the pattern from other mega IPOs: a first-day pop is engineered excitement. The honest verdict on a company like this comes quarters later, when results either justify the price or they don't. Anthropic's IPO is a genuine milestone, possibly the first frontier AI company to test whether these staggering valuations survive contact with public markets. It might be the opportunity of the decade. It might be the clearest sign yet of an AI bubble. The truth is nobody knows, and anyone who tells you they do is selling something. Watch the S1, ignore the hype, and wait for the real numbers. This is educational, not financial advice. Always do your own research. If you want the clear version of these stories instead of the noise, subscribe.